Sawadee krap and welcome to this quarterly video of TSP Funds. First, we would like to wish you all the best for the new year. During the last quarter, the inflationary pressures increased, and against this backdrop, the Federal Reserve accelerated the pace of its tapering, admitting the persistency of the inflation. This inflation, coupled with growth concerns posed by the new variant, confirms the risk of stagflation for the global economy. In this challenging environment, volatility has significantly risen and markets displayed mixed performance. On equities, developed markets ended the quarter with strong returns thanks to a very good earnings season. The SET index also went up on the back of improving outlook, despite concern over the virus resurgence. On the opposite side, broad Asian markets lost ground, penalized by significant fall of Chinese equities. On the fixed income side, global bond markets ended on a stable note. In Thailand, government bond index was almost unchanged as well, while corporate bonds displayed positive returns. And finally, on currency markets, Thai baht slightly appreciated versus the US dollar over the last quarter.
In this more volatile environment, TSP portfolios display strong returns in Q4, except Preserver, which suffered from rising rates in Thailand during the period. In relative terms, all the funds were close to their benchmark, Go-Getter outperforming the most, while Nurturer underperformed. Now looking into more detail. In equity, the main contributor was our selection of funds in Asia, with Schroder Emerging Asia and Schroder Equity Yield. They benefited from a strong stock picking and avoided most traps in Chinese stocks. Our selection of funds in Thailand also helped, with K-Star and Chemi Small. On the negative side, the global equity fund Goldman Sachs Global Core and our exposure to Japanese equity detracted the most. On the fixed income side, our exposure to global rates through PIMCO Global Bond was the main detractor, while our bet in Chinese government bonds with UBS China Fixed Income was the top contributor.
Entering into 2022, three themes should lead the market moves. First, with the emergence of a new variant, the virus cycle will be in focus once again, influencing expectations on growth, inflation, and central bank policy. However, at this stage, it is too early to make a judgment on Omicron impact. Secondly, further inflationary pressure is definitely a risk in the coming months, even if the level of concern is not in the red zone yet. Despite the change of tone from the Fed, we think monetary policy will remain on the easy side throughout 2022, with rates at a very low level. The third item is China. Chinese government has been active in supporting the real estate sector and taking a major role in the Evergrande restructuring. Broadly speaking, policy stance looks much more constructive in the next year, and we believe it will be a key driver for the market. At this stage, while global expansion is continuing, rising uncertainties and the risk of policy mistakes lead us to remain around neutrality on equity, with a well-diversified approach. We keep a focus on quality, while we believe value stocks may offer opportunities at some point. On the government bond side, intermediate and long-term yields don't reflect yet the change in Fed rate hike expectations. This reinforces our cautious view on duration. Finally, we continue to be constructive on credit market. Corporate fundamentals are solid and valuations are much more attractive after the recent spread widening.
During the last quarter, we initiated some trades to adjust our investment strategy, and we introduced new positions in the portfolio. Within equities, we continue to favor developed markets. On this space, we recently reinforced Amundi US Pioneer, which is tilted to quality stocks on the US market. The fund is managed by an experienced portfolio manager able to migrate between growth and value names. In Asia, we decided to introduce Schroder Asian Equity Yield to bring further diversification with a differentiated approach targeting dividends of Asian companies. At the end of the year, after the significant drop of Chinese market, we decided to reinvest on JP Morgan China as we expect a more supportive policy mix in 2022. In Thailand, economic outlook has improved, but recovery will take time, and tourist return is still at risk given uncertainty on COVID developments. While we remain underweight on Thai equities, we continue to expand diversification on large cap with the introduction of Krungtai Set 50. On the fixed income side, we bought UBS China Fixed Income. This fund invested mostly on Chinese government bonds, displays appealing yields, and offers strong diversification benefits. In Thailand, we decided to reduce local bond duration amid higher rate environment. To this objective, we trimmed K-Fixed Income, which has a long duration positioning. Finally, in December, we reduced global bonds exposure and reinvested on Thai short duration bonds as upward pressure should prove to be stronger on global rates. Thai bonds could also benefit from a prolonged accommodative policy from Bank of Thailand. To conclude, a word on the key benefits of TSP. TSP funds offer you a very simple way to diversify your savings and to have access to the best experts in investment. These are the key drivers for long-term performance. We thank you for your support and attention, and we'll meet you again for the next quarterly video of TSP Portfolios.
TMB และธนาชาติเปลี่ยนเป็น TTB เปลี่ยนเพื่อให้ชีวิตคุณดีขึ้น